Bloomberg Audio Studios. Podcasts, radio, news.
This is the Bloomberg Daybreak Europe podcast, available every morning on Apple, Spotify or wherever you listen. It's Friday, the 2nd of August here in London. I'm Caroline Hepker.
And I'm Stephen Carroll. Coming up today, stock markets slump and Treasuries rally after weak US economic data ramps up expectations of Fed interest rate cuts.
The AI story turns sour for two big tech names as Intel and Amazon spark separate concerns over how to profit from the rise of the tech.
Plus, we'll bring you our interview with the Bank of England Governor Andrew Bailey as the BOE cuts rates for the first time since the pandemic.
Let's start with a roundup of our top stories.
Markets are gearing up for more volatility around today's US jobs report after a week that saw three of the world's largest central banks moving in different directions. There have been major moves on stock and bond markets after weaker than expected economic data from the US. The jobs report today could be the next catalyst for the bull run in US Treasuries. Gary Dugan, CEO of the Global CIO Office, says he thinks the Fed's making a policy mistake.
There's a real soft underbelly to the US economy at the moment, compounded by the clear weakness in places like Europe very recently, and of course in China. And central bankers are behind the curve and will have to accelerate their cuts in interest rates.
That's Global CIO's Gary Dugan there. Two-year Treasury yields fell to their lowest since May 2023 and the 10-year yield is back below 4% for the first time since February. Bond traders are now fully pricing in 3 rate cuts from the Fed this year after the Bank of Japan raised rates and signalled more was on the table.
Meanwhile, the Bank of England's Andrew Bailey says that interest rates won't go back to near zero. Speaking after the central bank's first rate cut since 2020, he told Bloomberg that borrowing costs will likely settle at above pre-COVID levels.
Don't expect we're going back to zero, because zero was the product of huge global shocks, starting with the financial crisis, then obviously COVID as well. I think to get to there, something really bad has to happen that we're not currently expecting. It will be lower than where we are today, but I think it's very clear that we're not going back to zero.
Andrew Bailey there, speaking to Bloomberg's Francine Lacqua. He and fellow Monetary Policy Committee members voted 5-4 to cut interest rates to 5%. That's down a quarter point from the highest level that we've seen in 16 years. Policymakers also signalled more reductions are likely in the months ahead, but did not offer specific guidance on how quickly they will arrive.
Meanwhile, a stock slump is deepening in Japan after the Nasdaq saw its biggest one-day reversal in 2 years. Tech giants are still betting on AI to bring in growth, even as investors turn sceptical. In an earnings call, Amazon's CEO Andy Jassy warned profits will have to take a back seat so the company can invest in new technology.
We remain very bullish on the medium to long-term impact of AI in every business we know and can imagine. The progress may not be one straight line for companies. Generative AI especially is quite iterative, and companies have to build muscle around the best way to solve actual customer problems.
Jassy wraps up a week of tech earnings that saw some of the giants giving a mixed picture on how far they've managed to realise gains from the record amounts of AI investment.
Well, let's go to Apple now, which predicted that its new artificial intelligence features will spur iPhone upgrades in the coming months. The company had an upbeat third earnings report, beating revenue estimates and predicting sales growth. Bloomberg's Mark Gurman says that AI has become a core part of the tech giant's phone offering.
Apple Intelligence is really the big upgrade on the iPhone that they're trying to sell this year. They talked about AI so much on this call. I haven't heard them talk about AI so much since their developers conference in June or maybe ever.
But Mark Gurman adds that the new AI features won't be rolled out in China, where investors are concerned about Apple's sluggish sales.
Intel showed the dangers of the AI era, announcing plans to cut 15% of its staff, and it suspended its dividend for the first time in more than 30 years. The chipmaker has been losing customers to rivals like Nvidia. Bloomberg's Ed Ludlow spoke to Intel's CFO, Dave Zisner.
The call with Dave started with the results weren't great, and it was a difficult phone call from there. I think the point or the admission is that they were very slow to adjust their business to the reality of the environment that they're in and their own place in the markets in which they operate.
That was Bloomberg's Ed Ludlow there. Intel's shares fell by more than 19% in after-hours trading after the earnings were published.
Now, in other news, Russia has freed Wall Street Journal reporter Evan Gershkovich as well as jailed Kremlin critics. It's the country's largest prisoner exchange with the West in decades and involved the release of a prized assassin sought by President Putin. Gershkovich, who was arrested in March 2023 whilst reporting in Russia and later convicted of espionage, charges that he and the Journal reject, was greeted by President Biden and Vice President Kamala Harris upon his return. The US National Security Advisor Jake Sullivan says that work to free those still held abroad will continue.
Most of the time, as you can imagine, those are tough conversations, but not today. Today, excuse me. Today was a very good day, and we're going to build on it, drawing inspiration and continued courage from it for all of those who are held hostage or wrongfully detained around the world.
That was Jake Sullivan speaking there. During the exchange, which took place in Ankara in Turkey, Russia also let go the former US Marine Paul Whelan, who was jailed in 2018 and later convicted on spying charges that he denies. In total, the swap included 24 people, 16 going to the West and 8 being returned to Russia.
President Biden has promised to provide Israel with new defensive US military deployments. According to the White House's summary of a call with Israel's Prime Minister Benjamin Netanyahu, Biden also stressed the importance of efforts to de-escalate regional tensions. It comes as Hamas, Hezbollah and their sponsor Iran have all vowed to avenge the assassinations of Hezbollah member Fouad Shakur and Hamas leader Ismail Haniyeh. Hezbollah's top leader, Hassan Nasrallah, said on Thursday that the conflict is now an open battle on all fronts. He stopped short of declaring the killings to be an act of war. And we're going to dig into that recalibration in just a moment, plus bring you our interview with the Bank of England Governor Andrew Bailey after the rate decision yesterday. But a brief word on another story that caught our eye this morning about something that perhaps could be a big concern for some of the big European luxury names. This is a new grey market for luxury goods in China. There are platforms out there that are buying real, authentic goods from the likes of LVMH and Kering and selling them for massive discounts in China as well. One of these platforms, Diyu, grew by 11%. The sales of Louis Vuitton groups alone on that as well. It actually accounts for 14% of Louis Vuitton's total estimated sales in China.
So hang on a second. These are real goods. So they're having to
They're buying
buy
them abroad, bringing
right.
them into the country and reselling them at a discount to what the companies themselves are selling in China.
Okay, so that doesn't make business sense to me, does it? It must be expensive to do that.
Well, this is working around currency differentials and the way that you can work with these the high prices for some of these goods to sell them at a cheaper price. Of course, the sales are still contributing overall to these big companies' platforms, but it could be an interesting one to watch as, of course, many of these companies have been struggling to see their growth maintained in China after things have been slowing down there as well.
Well, look, maybe the Olympics in Paris might have helped Louis Vuitton, the French luxury names, just a little bit. But anyway, yeah, nice story on the terminal this morning.
Well, let's dig into some of those tech earnings now that have contributed to the sell-off on markets. Our chief correspondent, Mark Gurman, is with us for more. Mark, great to have you on the programme. You know Apple inside and out. Let's dig into their results. A return to revenue growth, but again, sluggish sales in China. How much of a worry is that for the company?
Yeah, thanks for having me. I mean, overall, this was a pretty good quarter for Apple. This is their June quarter. It's usually a lull period as people are awaiting the new products in the fall. Beat Wall Street estimates, grew 5%, so grew a little bit more than Wall Street was anticipating, and even Apple itself based on their commentary 90 days ago. But you're right, Greater China down 6.5%. And so this is yet another quarter. There have been several quarters in the last couple of years where Greater China revenue has declined. This is very much a concern. Typically, when Greater China revenue has declined in recent years, Apple has said that the declines have nothing to do with the iPhone. They didn't say that this time, which leads me to believe that they're seeing some iPhone-specific softness in mainland China and probably other parts of Greater China as well.
Yeah, okay. So then in terms of the signals about the state of the smartphone market overall for Apple, what did we hear on that front?
I think the smartphone market overall is pretty good. It still generates, 60% of Apple's revenue. What was a little concerning is when they gave guidance, they talked about how services would grow double digits. They talked about how the fourth quarter revenue growth on an annual basis would be about 5%, same as the June quarter, right? They did not mention the iPhone one way or another. Now, I can tell you that if it was going to accelerate, if they were going to see positive momentum on the iPhone in this fourth quarter, they would have come out and said it, because that would be pretty good for the stock. The fact that they didn't say it leads me to believe that you're going to see flat performance year over year on the iPhone and probably the entire products business as well.
That's a really interesting one to watch for the future as well. Now, Mark, you've been reporting on how Apple's delaying the rollout of its AI features. What did we learn from this earnings report about that part of the future growth of Apple's business?
We didn't learn anything new. What Apple did was mention Apple Intelligence probably 50 times over the course of the call, because they know that saying Apple Intelligence and AI are buzzwords that's going to excite the algorithmic trading and excite analysts and excite Wall Street. But I'm seeing beyond that. I've started testing these features. I'm not seeing anything available right now that should spur demand for new handsets. I do believe in about a year from now, when we're talking about the iPhone 17 cycle, there are going to be people who are going to want to update for the AI features, because by then there'll be an entire suite. It'll be a lot more locked in, and there'll be better features. But as of right now, I think we're talking about something that is more marketing hype than anything.
Okay, that's pretty interesting. Just lastly, if you could give us your view, though, overall, Mark, on the state of the results we've had from the big tech shares. We're obviously looking at the tech sell-off that we had yesterday. What are investors thinking now as we go into this Friday morning, where you also see a sell-off in Japan? What do you think investors are thinking about now?
Well, I think investors are a little scared. I think certainly we are heading into election season in the United States. And so I think investors are probably going to be holding their bets for now. They want to see how the election is going to turn out, and then they'll make, other decisions there. You have to understand that some candidates look at big tech differently. Some candidates some political parties in the U.S. may not want to approve, certain acquisitions. So I think that, investors are going to really make decisions after the election about what they're going to do in terms of their investments. But certainly it's a scary time in terms of tech stocks. Of all the earnings that we had yesterday between Apple, Amazon, Intel, and some of the other big companies, Apple was really the only one you could come away from and saying, wow, this was a success. Amazon and Intel were both disasters. I mean, Intel, they're laying off another 15,000 people because their numbers were so bad. They're pausing their dividend. I mean, that doesn't happen often. I'm sure there'll be people calling for the head of the CEO soon at Intel. But, we'll see what happens. You had Amazon blaming the situation in the Middle East. You had Amazon blaming the Trump assassination attempt as reasons why sales have been down recently. And so these companies are really throwing excuses out there, when the reality is it's just a tough economic backdrop.
Mark, great to have you with us on the programme. That's our chief correspondent, Mark Gurman, there, talking us through some of the tech aspect of this sell-off. Yeah, absolutely. And if you look at the Asian market this morning, SK Hynix extending losses to 10% amid the Asia chip stock sell-off, which is that convergence of the story around the US election about what happens in terms of the US and China and restrictions on exports to China from the US. Of course, it's just part of the story of what's happening in the tech sector. The sell-off extending across Asian markets today. The MSCI Asia Pacific Index down some 3%. The rally in Treasuries, though, extending into a seventh day. The 10-year yield breaking below 4%. Traders now looking at today's US jobs report as a potential another catalyst, cementing the view that the Fed will cut rates in September. Let's get more from Bloomberg's Garfield Reynolds, who leads our Markets Live team in Asia. Garfield, can you put these Treasury moves in context for us below that 4% handle and the catalysts involved?
Well, I mean, the catalysts are that investors are seeing a clear downturn for the US economy, and the concern that had been bubbling under the surface for a while, especially from the bond market, that the Fed was going to, as it traditionally has been, too slow to cut rates when a downturn comes, that's kind of been crystallized, especially seeing as we had a somewhat less dovish than expected FOMC statement this week, followed by, yes, a dovish Powell, but still no certainty from the Fed anyway that a rate cut would come in September. So they're still wanting more data, wanting to wait and see and be sure that they can cut. Meanwhile, the economic picture has been darkening in the US and earnings as well. That's something that feeds into what investors are looking at that doesn't necessarily feed so directly into what policymakers are looking at. So they've looked at all that and they've said the Fed is going to cut rates 3 times this year. That's now priced in. And there's definitely a pattern of concern that not only will the Fed cut 3 times, but they might end up having to go 50 basis points. Instead of having 3 25 basis point cuts, they may well end up doing a 50 basis point cut at some stage because they are getting behind the curve.
Yeah, I think that's fascinating. So then what do you think are the key numbers that the market's going to be watching out for? Because earlier this week it was about the JOLTS figures. Also that ISM manufacturing figure out of the US came as a bit of a shock. Again, sort of cementing the idea around a US slowdown. What do you think we're going to be watching out for today in terms of the key numbers that will drive markets?
Yeah, well, I mean, there's a lot of key numbers there, but the first and foremost is going to be what goes on with payrolls themselves, the change in non-farm payrolls, expectations for that to ease lower to 175,000 jobs from just over 200,000 the prior month. If you get a serious if you come well under that, like 150,000 or below, that's going to ramp up again those concerns that the slowdown is really hitting hard. The unemployment rate could also be very important in that context, in that it's close to triggering what's called the SARM rule, where if it rises by enough in over a 6 to 12 month horizon, that's seen as guaranteeing a recession. If we were to see the unemployment rate tick up to 4.2% rather than stay at 4.1%, which is the forecast, that rule would probably be triggered and you could see more of these fear trades that are coming along. The other thing that could occur that might scare people would be if earnings surprisingly ticked up or came in little changed, or even accelerated, because then you would have these concerns that, even though the labour market is showing some weakness, it's also throwing up cost pressures that might, again, increase the potential for a Fed policy error.
This is Bloomberg Daybreak Europe, your morning brief on the stories making news from London to Wall Street and beyond.
Look for us on your podcast feed every morning on Apple, Spotify and anywhere else you get your podcasts.
You can also listen live each morning on London DAB Radio, the Bloomberg Business app and Bloomberg.com.
Our flagship New York station is also available on your Amazon Alexa devices. Just say, Alexa, play Bloomberg 1130. I'm Caroline Hepker.
And I'm Stephen Carroll. Join us again tomorrow morning for all the news you need to start your day, right here on Bloomberg Daybreak Europe.